Weekly stock market update. There will be a webinar as well, but this is just the first part of it. Okay, remember this is not individual advice because I don't know you individually. These are the valuations. They look much the same as they've done for the past 2, 3, 4 years. In other words, banks, energy companies are relatively undervalued. So how is it that the ones in red, particularly the big red blocks, the size of the block measures the market cap of the companies, are the ones which have done the best? That's because valuation isn't the only measure of stock price movements. You're paying $25 for every future dollar in profit of Microsoft. It's roughly been at that for all the years over which, well, the 18 months over which it's gone up 100%. Similarly, you're only paying $12 for every future dollar of ExxonMobil, but I suspect the future lies with the AI company Microsoft, not with the oil and gas company ExxonMobil. These are the sectors year to date and how they've been performing. And if we look at returns, you can see the vast majority are up. Some, almost everything in that sector is up, such as utilities. In others, it is, as you would expect, such as technology, a wide spread with some big losers, which is why we have stop losses, one or two big winners, which is very difficult to call in advance, which is why we let winners run. And then the vast majority, small losses, small gains, and they sort of cross each other or cancel each other out. So most of your gains in any portfolio, whichever sector you're invested in, will usually come from a minority of companies. Roughly 20% of your holdings will generate about 80% of your profits in any given year as a rough rule of thumb. But if it's a great year like 2023, those numbers will change slightly. So what are the earnings that you might want to have a look out for? BMO means before market open, AMC after market close. Any big ones coming out? Not really market changing. I mean, Eli Lilly is a massive company, Disney is, but those aren't really likely to move the market. None of the ones coming out are likely to be significant, even though there are significant companies. By the way, don't forget to do all of that, please. It really helps. The way I invest, as you know, is value, growth, income. I need to tick all of these boxes because I like a good night's sleep. Cash return on capital invested, momentum, Sortino, and alpha. In other words, I'm looking for companies which tend to go up more than the market, which tend to have few falls, and the falls come back quickly. Historic figures do not guarantee the future. Okay, it's not physics. Over the past week, of course, tons of red with the exception of Meta, pretty much, and PG. We'll look at Procter & Gamble later. It's one that I hold from before. Real estate doing well, the REITs in particular. But other than that, of course, it was a bloody awful week. Over the past year, however, virtually everything over the last 12 months has gone up. Let's continue this deep dive. Those are the exchange-traded funds. I don't propose to talk about much about them on this one. Year to date, where are we? Well, you get these great periods of gains. You're all happy. Then you lose all your gains. That's your despair. Then you get the gains and you're all happy. And everybody decides that the periods of delight when the market's rising is when they'll determine their risk appetite, which is the wrong time to determine your risk appetite. Your risk appetite should be determined when the market is falling right now. And sadly, that's the point at which you decide. There will be absolutely clear, even in up years, whether it's 7% or 17, 9% or 19, there will be prolonged periods of 0% returns. There will be periods where all the gains you saw will go, okay? And that's even in up years, just so you know. That is how the market moves. People don't realize that that's how it moves in that fashion, okay? Which sectors and what are they doing? Well, utilities, communications, financials, and so on. That's healthcare. I don't tend to gamble on sectors. I tend to look at individual companies, what's called a bottom-up approach, not top-down. Similarly, what factors, like is it value, is it small cap, is it volatility, is it momentum, is it dividends, growth? And I want all of these boxes ticked. I really need all of those boxes, other than ones which are mutually exclusive, like small cap can't also be a large cap, but you can be a value company, a dividend company, and a momentum company, and a growth one. I want all of those boxes ticked because, as you can see, it's very difficult to know at any particular time what's going to win. So why not go for the ones which tick more or all of the boxes? Over the past year, the Nasdaq is up 18%. I'd take that in my pension anytime. However, As with every single year, it involved being underwater for a prolonged period of time. It involved breaking even and having 0% for a long period of time. It involved giving up a lot of gains, multiple periods of time. That's how 18% or 17 with the S&P is done. That is how winning is done. Long periods of negative returns, long period of 0% returns, and long periods of gains going. Those three things, negative returns, 0% returns, and gains vanishing, those three things are the things which disturb investors the most, inexperienced ones, because they think it's going to be the fourth thing which will happen all the time. Oh, it just goes up. Some of them, like my 6-year-old son, would say, why can't I have my wins all the time, Daddy, first, before we get any of these? Why can't I have it in this order, Daddy? 4, then I don't care if it's 1, 2, or 3, but I want 4 first. It doesn't work like that. There's 4 things that can happen in the market. And if it's a bull market, 4 will happen more often than 1, 2, and 3. But the ordering is not down to you. It could be 4, 1, 2, 3. It can be 1, 4, 2, 3. It can be 1, 2, 3, 4. It can be in any combination. Guess what? Most combinations don't begin with a 4. Simple mathematics, simple statistics. Okay? So, breakthrough that you've now had will help you stay calmer for longer without the need of drugs. Top 10 FTSE 100 stocks over the past month are these. The S&P 500. How does this fall compare? Well, it is. I'm going to sound like a bloody broken record now. Maybe it's gone from being a baby bear to maybe just transitioning into a mother bear. So that's what a mama bear looks like when the MACD is falling. Baby bear is when the MACD is rising. So that was a baby. That's a mama. Babies are more common than mums. Mums are more common than dads. Okay, dads are overbought, falling MACD through its moving average at a significant gradient. We're not at daddy bear stage yet. We seem to be transitioning from baby to mama. If you don't like that, it means you probably took on more risk and you're trying to trade your investments. Entirely your prerogative, of course. When did this happen again? If you really want to look into a crystal ball, it happened here. What happened? Oh, look, the market falls. Sometimes it rises. If it becomes a daddy, then that happens. It's not quite a daddy at the moment. The NASDAQ, similar kind of story, although this is still a baby bear because the NASDAQ tends to be more volatile. That was a baby. This was a mama because the MACD started falling. And this is what a daddy looks like. Now, when it's a daddy bear, out of my quality 5+ and out of indices like the NASDAQ and S&P, I hold cash. In fact, I pretty much hold cash on everything if it's a daddy bear going across the board. When it's a mama, I'll only get out of leverage and ease back on some oversized positions, but generally tend to ignore things. In April, I ended up rebalancing because we'd had gains since January 2023, which were huge, and I ended up getting out of Meta, which I said was a bit premature, and Apple, because I was rebalancing. In other words, what happens to me might not be what you do, because January 2023 is when my gains started. If yours didn't start then, you'd probably happily have held on and just thought, well, I'll take the losses. Whereas I would think, well, I've got massive gains, I'll take those losses. We're going to make different decisions based on the endowment we have to begin with and the gains and where we started. So asking me what I would do now, when it's just going up and I'm sitting on massive gains here, I can take those falls. You might not be able to because you got in late. Where did you get in? You got in almost like here, where it is toppy. Okay, and it continues to be. Might it go higher? Yes, it might go higher. Might it fall? Yes, it might fall. FTSE 100, it's dropped back a bit. It looked like it was going to go higher. It does tend to run out of steam very often, so maybe it's going to run out of steam once again. Part 2 is going to come in a second, where we look at these top 10 over the past month, which have gone up this much. We'll see if any are worthy of being in my pension. So part 2 coming up.